A lot of people thought, that Bitcoin would eat into gold's market. It's not. I mean, Bitcoin is still nowhere near, even though it got close to a record high today, above 73,000. It's still nowhere near its record high from 3 years ago, priced in gold. It's still down about 30% from that peak price. People thought maybe Bitcoin will take demand from gold. It may have taken some demand from gold, right? Because we saw a lot of liquidations year to date out of the gold ETFs, but it hasn't stopped the price of gold from going up because the retail buying is a small piece of a big pie when it comes to gold. Right now, the big institutions abroad, foreign central banks, they're not buying Bitcoin.
With gold and Bitcoin both at or near record highs, the debate over which is better hard money is heating up as investors seek hedges against economic uncertainty, inflation, and geopolitical change. But gold's latest peak has also drawn commentary from prominent advocates such as notorious metal money advocate Peter Schiff, who shared on X, gold closed at a record high above $2,755, on track for its best year since 1979. Reflecting on market trends, Peter Schiff argues that Bitcoin has not impacted gold prices, noting steady institutional demand for physical gold, particularly from foreign central banks. He also suggests that banks worldwide should invest in gold mining stocks to secure future supplies. Gold mining stocks can be more volatile due to factors like production levels, operational risks, and management decisions. However, if you accept a bit more risk, investing in gold stocks could be a savvy move in today's unique gold market. In the evolving investment system, Peter how investors are shifting from gold stocks to Bitcoin, drawn by the narrative of Bitcoin as digital gold. While this trend is notable, gold remains a timeless asset with its own unique strengths, especially as a hedge against inflation and uncertainty. According to data from the World Gold Council, gold has consistently outperformed both inflation and the growth rate of the world economy. From 1971 to 2023, gold's compound annual growth rate was 8%, compared to 4% for the U.S. Consumer Price Index and 7.8% for global GDP growth. While shifting his stance to political leadership, Peter predicts that the election outcome could affect Bitcoin and gold mining stocks. If Trump loses, it might lead to a Bitcoin sell-off, redirecting funds to gold mining. Less than 2 weeks remain before the U.S. presidential election. There's a growing sense of uncertainty in the air. Historically, U.S. elections have been known to be extraordinary macroeconomic events guaranteed to move the gold market significantly, largely due to political uncertainty and the potential for shifting economic policies. Now we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
One of the reasons probably that the gold stocks are as cheap as they are is I think a lot of investors who might be buying gold stocks are buying Bitcoin ETFs and MicroStrategy instead. I think that's where a lot of the demand is coming from because investors only have a certain amount of money. And so if they decide that they're going to use their money to buy MicroStrategy or to buy Bitcoin ETFs, what would they have bought with that money if they didn't buy those stocks? And since the way Bitcoin is marketed in the financial media, it's gold 2.0, it's digital gold, it's better than gold, it's the future, gold is the past, gold is worthless. You would think that people are buying these stocks instead of buying gold stocks. A lot of people thought, that Bitcoin would eat into gold's market. It's not. I mean, Bitcoin is still nowhere near, even though it got close to a record high today, above 73,000. It's still nowhere near its record high from 3 years ago, priced in gold. It's still down about 30% from that peak price. People thought maybe Bitcoin will take demand from gold. It may have taken some demand from gold, right? Because we saw a lot of liquidations year to date out of the gold ETFs, but it hasn't stopped the price of gold from going up because the retail buying is a small piece of a big pie when it comes to gold. Right now, the big institutions abroad, foreign central banks, they're not buying Bitcoin, right? Even though a couple of sovereign wealth funds bought MicroStrategy just because it's a momentum play, but the central banks aren't adding Bitcoin to their reserves. And I think a lot of the foreign demand in the physical real market, you still have a lot of gold. But where I think Bitcoin has had an impact is in the mining stocks, because there it's a whole different, group group of investors. The people who are buying gold mining stocks are very different than who's buying physical gold, right? None of the central banks that are buying physical gold are buying mining stocks. Now, they probably should. In fact, that would be smart for them to do that, because if they bought some of these mining stocks, they would own all the gold that's in the ground. And then when those companies mine it, they wouldn't sell it. They would just bring the gold out and just put it in their vaults, right? That would be the smart play for a foreign central bank, right? Instead of China buying up a lot of gold, they should just buy up a lot of gold mining companies, and they'd end up with a lot more gold for a lot less money. But they're not doing that right now. But the people who normally would be buying gold stocks are buying Bitcoin ETFs or MicroStrategy instead. So that's where I think you've seen the impact. It's not on the price of gold, it's on the mining stocks. That's one of the reasons that they are so cheap, is because the investors who would otherwise be buying these stocks are not buying them, because they're speculating in these other assets. So that's also keeping these stocks cheap, and I think it's going to reverse. Now, if Donald Trump wins, if Trump loses, I would expect to see a big sell-off in Bitcoin and MicroStrategy. Everybody believes that if Trump wins, this is going to be the greatest thing for Bitcoin, because, we might have a Bitcoin reserve. Trump's going to be the Bitcoin president. Trump has made a lot of promises that he can't keep to get elected. And that's not unique. That's pretty much par for the course when it comes to democracy. And I think one of the broken promises is probably going to be about Bitcoin. And so I don't think that the U.S. is going to be buying up a bunch of Bitcoin and putting it on the balance sheet of the United States. And I still think there could be a lot of regulation coming that's not going to be welcomed by crypto. Unfortunately, I'm not in favor of that, but I think that's just the trend. And so I think if Trump loses, you would expect a big collapse, and that might free up some money to go into the gold mining stocks and the silver mining stocks, as money is coming out of Bitcoin ETFs and MicroStrategy. Obviously, Donald Trump's stock would plunge if Trump loses. But the thing is, if Trump wins, I still think that you get a sell-off in like crypto.
According to Peter Schiff, precious metals are promising investments, with silver likely to top $35 soon. Surprisingly, silver has emerged as an even stronger performer than gold in 2024, with prices climbing nearly 42% from $23.76 per ounce on January 1st to $33.9 today. This impressive gain highlights the potential for generating substantial returns by investing in silver, though investors should approach this option with an awareness of the metal's characteristic volatility. Various market analysts, including Peter, noted that while gold is rising, mining stocks lag behind, largely due to Newmont's recent drop. The GDX index needs to climb about 5% to reach last week's peak. With a bullish outlook, he urged risk-tolerant investors to consider mining stocks for their favorable risk-reward potential, highlighting companies like Franco-Nevada and Osisko that have performed well amid recent challenges faced by Newmont. Let's get back to the interview.
Gold again today hit a new all-time record high. In fact, as it's trading this evening, I think it's up again to another record high. We're at 2,778. So we're only $2 below 2780, almost at 2,800. I said on my Friday podcast that I expected gold to hit a record high by Monday, and it took until Tuesday. I don't think we made a record high, although we might have. We might have made one overnight, I forget. But we certainly, just exploded to a record high tonight. Now, what's not at a record high is the mining stocks, because of that big drop they had last week on the insignificant Newmont miss, which I've already discussed at length. But the GDX, which is the major index of gold mining stocks, still has to rise 5%, more than that, from here to get back to last week's high, even though gold today is higher than it was at any point last week. That was a huge shakeout. Probably a lot of people that got into gold stocks, unfortunately, got shaken out, and they're going to miss this huge bull market. I mean, the gold stocks will make new highs soon, and they're a great buy. I mean, as good a buy is on gold and silver, and I was stressing that again on the last podcast. In fact, silver is back above 34 again. It's almost 34.50. Still haven't taken out 35. We got close last week, and so silver had a bit of a bigger pullback than gold, and so while gold made a new high, record high, silver hasn't taken out last week's high yet, but it probably will. My guess would be silver will take out $35 this week. Maybe it'll take it out by a big number. And I think the rally would actually be bigger based on this weak economic data if the markets didn't expect Trump to win, because weak data is actually good for gold because it leads to bigger deficits and rising inflation. But the gold stocks are the buys. Again, I would encourage people to be buying these stocks if you are are a risk taker. I mean, if you're a very conservative investor, if you can't afford to lose money, then gold mining stocks are not for you. But if you're willing to take a risk, I can't think of a better risk reward situation out there than the mining stocks. So take a look at the Euro Pacific Gold Fund. You can find out about it on my website, europac.com. You can buy it no load at any of the discount brokerage firms I've been talking about it. The weakness in Newmont, that might cause some of the gold investors to want to, mitigate those type of surprises by moving money into the streaming companies. And I think they're just starting to go, or Cisco is at an all-time record high. Stock's never been this high in history. That's a great buy here. I think I own both those stocks. I've owned them for a long time, and they've done very well. But they're going to do, I think, better in the short run because people are not worried there about the cost surprise. But, I think one of the things that I think is significant, and of course, the media paid no attention today to gold's record high. I guess since gold makes a record high every day, it's not news, right? It just keeps going up. What's more important than gold's record high is what it signifies, the warning that it's sending. And that also is falling on deaf ears, and nobody is talking about it.
Historically, sharp moves in these assets have often preceded economic downturns as investors seek refuge from anticipated turbulence. This pattern, as observed in the early 1970s and during the 2008 financial crisis, could suggest that today's price surges are signaling a lack of confidence in traditional financial markets. Goldman Sachs analysts recently said the purchases of gold by central banks will remain structurally elevated. As the market braces for potential volatility ahead of the U.S. election, how will these dynamics influence your investment strategy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.